Hello, investors. Welcome to Technically Speaking. Let's go over some of our ideas for the upcoming week. The US market continues to hog the limelight. This time, however, it is not because of a resilient rise. Rather, all US indices simultaneously fell in a relatively significant way for 2 consecutive days. At one point on Thursday, the Dow Jones Industrial Average fell over 1,000 points. This occurred on the day RW Advisory founder and strategist Ron William suggested on CNBC of market inconsistencies and of a possible Minsky moment brewing in the current state of the US bourse. And for more details on the Minsky moment, please refer to this week's TechSpeak. Another interesting headline is the CNBC report identifying SoftBank as the NASDAQ whale that gobbled up $4 billion in stock options in big tech companies the past month, thereby driving up volumes and contributing to a trading frenzy. So is Wall Street starting to mince no words on a prospective Minsky moment? This chart below shows how 3 indicators signaled diverging statistics which led to 2 major trend reversals this year. The first one occurred sometime February, Black Monday, when all indices declined by approximately 30% from its high. Prior to the reversal, the market was ascending but volume was flat. MACD was falling, and the VIX was increasing, manifesting an escalation in volatility, which should not be the case in a bull market. The second time was when the market reached its March 23rd low, and indicators were hinting selling fatigue amongst trading participants. The indices then reversed themselves and rose thereafter. As of September 2, when we revisited our technical display, we once again detected several divergences present in these indicators. For one, volume remains sluggish and continues to decline despite the market rise, possibly implying diminishing interest. MACD and price values deviated, possibly reflecting waning buying momentum. Lastly, VIX figures started to creep up, suggesting increased volatility, which is not very common in a bull run. Noting all of these, Wednesday, September 3 greeted us with a relatively considerable market drop, an average decline of 3% for the day. This chart shows the price action in the last 2 days. Note the price deterioration violated 2 uptrend lines and is currently holding above the trend line of a higher degree. Given the magnitude of the drop, prices may consolidate in the near term before making its next significant move. At the risk of breaking the current bullish trend, the various indices must not fall below the current trend line. Failure to stay above the current trend line may trigger the start of a possible 40% market crash in the foreseeable future. This chart shows the S&P 500 daily chart and the potential target area of the next market decline. Also in this chart, we have identified a potential corrective or expanding triangle pattern. For more details on expanding triangles, please refer to this week's TechSpeak 2. This information is similar to a regular symmetrical triangle but in reverse. As such, the market area of the potential decline is deeper than the previous one. More specifically, we're looking at a decline of up to the 2,100 area of the S&P 500. Once again, we ask, what do these moves have to do with the local market? Hopefully nothing. However, experienced market participants know that what happens in the US will somehow indirectly affect the movement of the PSEI. This chart shows the PSEI and where we left off last week. The local index continues to weaken and move within the established downtrend channel, while volume and other indicators still show lackluster interest. To better understand the current downtrend move, let us once again examine the PSEI's hourly chart. This chart confirms the first pennant, and by taking its height, we're able to project the next price consolidation area, or the second flag. Provided the current resistance area holds, then the PSEI may still have one more downtrend move to go, which could bring the PSEI to around the 5,500 area, close to the initial 5,400 target area. Hence, we continue to monitor the situation in the US as it could act as a catalyst to further accelerate the PSEI's deterioration. Now we end this week's TS issue with another interesting article from Bloomberg. So is this truly a sign of market confidence, or another hint of an impending Minsky moment about to unfold? So that's all we have for this week's TechSpeak. Be sure to tune in next week for future market updates. Thanks everyone so much for watching and good luck trading this week.